Hey guys, and welcome back to episode 16 of the Real Estate Huddle. We're happy that you're joining us today, and we're going to talk about a very interesting topic today, something that is such an opportunity in the market right now. I mean, we just went through the biggest interest rate hike in history, and now, rates are starting to make their way down, but they're still pretty inflated at this point, around 7% as of today. And so we're going to talk about loan assumptions and how to take advantage of a loan assumption. Loan assumptions tend to be kind of like a legendary thing, like an urban myth in real estate, right?
Yeah, they're not very common until you're in a market where people are desperate to sell their house. And I shouldn't say desperate, but pretty close. They just need to sell their house. It's just another tool in the toolbox in certain markets. So an assumable loan, so you guys know, like a loan assumption is when there's an existing loan on a home and that existing loan is conveyed over to the buyer and all of its terms and everything that is included in that loan. So how that kind of works is, in a nutshell, they owe so much on this loan for their home. They're selling it for this price over here. So in order for them to assume that actual loan, they have to make up the difference between what's owed and what they're selling the house for. Mm-hmm. Does that make sense? So you got to kind of have a thick chunk of cash if they've owned the home for a while.
Yep.
I mean, if it's an assumable loan and they've maybe had it for a year, it won't be so bad, but you do have to have an initial investment to do that. But in a case like this, it can be extremely beneficial because they probably have a really good rate on their house.
Yep, absolutely. Yeah, and so I'm glad you defined it so that people understand like what it is. And a couple things to mention. So like most loans are not assumable. Mm-hmm. Any conventional loan or jumbo loan is not assumable. It says in the loan docs that it cannot be assumed and taken over by another person. But FHA loans are assumable. And so are VA loans can also be assumed. However, typically that doesn't happen on VA loans because that person wants to continue to use their veteran eligibility. Mm-hmm. And so if the veteran is, let's say, aging and looking to, maybe they're done owning property and they want to sell their last home and go into, senior care or something like that. That's a situation where that VA loan could be assumed and they would give up their eligibility to use their veteran benefits. Mm-hmm. And someone that's not a veteran could go in and assume that loan at a lower interest rate. And so here's, like, to put it in perspective, here's what we're talking about, right? Like rates are around 7% today. Some of these assumed loans from just 2 years ago are at, 2.5% in some cases, right? And so if someone, let's say, bought a house FHA 2 years ago at 2.5%, and now they got a job change that's taking them out of state, now they have to leave, and their house, I think it's going to become more prevalent because their house hasn't grown a ton in the last 2 years. Mm-hmm. It's been kind of 2 downish years in the market, right?
Yep.
I mean,
pretty flat.
Yeah. I mean, since the peak of the market in April of 2021, we've actually lost money and during that year. We went down in value, and in some cases around 7 to 8%. And then the following year, this past year, we've actually gone up about 5.5% and made up some ground from what we lost. And so, with both those years being fairly flat, there's going to be lots more opportunities for homes to sell and be assumed as far as the loan goes, and for buyers to come in and get a great interest rate. The only other challenge back then was how many conventional loans were happening and how many FHA loans were happening 2 years ago.
Exactly.
Right.
So a lot, I think we started seeing FHA come around a lot more often just recently. Mm-hmm. So it's a little bit harder to find. Yeah. But for those that have that big chunk of change, or whether or maybe they have a ton of equity in the home that they own now and they're wanting to make a lateral move, or they're whatever the case may be. Mm-hmm. If you have that money to do it, those are extremely beneficial. Those rates are like, you'll never see them again.
Yeah.
Most likely.
And in some cases, $1,500 less in a payment, right? Yes. Compared to what you would be paying today.
Yeah.
Pure interest.
I know people that are paying the same, if not more than what my mortgage is for a townhome condo,
Yep.
and I'm in a ranch style home with like a 4-bedroom home.
Yeah.
And so when it comes to utilizing all the options out there, this is one that is often underutilized just because it's not very popular. We don't see it all the time.
Yeah.
But it's important for you to ask those questions to your realtors of like, hey, can we look at assumable loans? Or hopefully your realtor already suggests that.
Right.
When it comes to how you find those, that's kind of like, that's the key. That's the, not the hard part, but that's where kind of the rubber meets the road and how you do that. It's kind of all through the MLS and keyword searches. And it's important for realtors, especially out there who don't know how to do that. It's extremely important that you learn how to keyword search in like private remarks and public remarks and things like that, because that'll find the diamonds in the rough.
So you're saying if I'm a buyer, I can't just go on Zillow and find an assumable loan?
Probably not.
Like, it'd be tough to do, right?
Yeah, I don't think there is an option. I personally am not a fan of Zillow, so I'm not on there a ton. So I may be corrected here, but I don't think there's a way that you can really narrow in a search like that on Zillow or Realtor.com or Redfin or whatever. But through our MLS, through the matrix, you can do a lot that you can't do on your own. So if you got a search set up by your realtor should be able to fine tune that search even to the point where you can look up keywords. So in this instance, looking up FHA, assumable, VA assumable, just the word assumable, assumption. I mean, we do this with investors all the time when it comes like TLC, facelift,
needs work,
all that kind of stuff.
Investor special,
bring
your tool belt,
all the stuff. And it's just like you type in this, comma, space, this, comma, this, and you can make a huge list of keywords that will really fine tune that search. And it's kind of nice because it can supplement maybe the other search that you have that's a little bit more broad. And you can supplement that search that you already have.
Right.
Just kind of give you an idea of what's really out there to assume
totally
with a really nice rate.
Yep. So like people that are kind of around our age, right? Like don't understand what happened back in the 80s. And my dad's been in the business for forever. So he's told me about the experiences he had, and other agents that are older in our office have talked about that time frame where, rates went all of a sudden from like 8% up to 18% during the hyperinflation days of the 1980s in the US. And then the oil crunch and all that just made it worse, And so they had a very tough time back then, but loan assumptions were happening a lot back then. Like that was when it was happening, and people would, loan docs were less restrictive as far as that stuff goes. And so you hear some of the old dogs in our business, right, talking about how they used to do assume loans all the time and stuff like that. But I just closed one last month. An assumable loan, which is the first one I've ever done in 16 years. And to tell you how unique it was, I was in a room with a bunch of other realtors. The room was packed, right, for our continuing education class. We probably had 50 people in the room. And they asked, so has anybody ever closed an assumed loan? And I was the only one to raise my hand in the room. And I'd just done it like the day before we closed. And so I was like, yes.
I'm pretty fresh.
I felt like a unicorn in the room because we had closed one, right? And it's just not common because of, it's kind of like looking for a needle in a haystack sometimes, unless you're super intentional about it. And now that I've seen that it's possible, because it is kind of like a mythical thing. Like you talk about it, but nobody's like, oh yeah, I've done one. I haven't talked to anyone that's done one.
It's a legendary
people
thing.
In the 80s.
Yeah.
And so like now I'm like, man, we need to start looking for this more for our clients and like be intentional about it, because I think those opportunities, because of the lack of growth in our market over the last 2 years, they're going to be more and more prevalent if we can just find some people that are moving with FHA loans. So if you have an FHA loan,
oh my gosh, that's why this episode is so important, because I don't think, first, like I said before, I think it slips a lot of agents' minds. We want to serve our clients to the best that we possibly can, using every tool that we can. But this one, like you said, it's like a unicorn. So you don't really think about it that often. I recently we listed a house on Turnstone, our Turnstone listing. They had an FHA loan, and they had 2.5 rate on that loan. And we were going to use it. Some things got in the way to where they couldn't use it quite yet.
Yep.
And that's something to ask your lender. If you do have a loan like that, make sure you are it qualifies for Assumable and to list that way. There are some things per loan that you got to make sure you have set and in line.
And if you're not current on your payments, it's not going to work.
That's one of them.
Transfer.
If you're not up to date, if you're a little bit behind, get up to date because that's really valuable. But what was I trying to get to here? Ultimately, it's not a lot of people know about this. And it's so important to have all the information because this could be the difference maker in selling your house in 2 weeks or selling your house in 2 months.
Totally. Yeah. I mean, at this point, like these buyers that just closed last month, when rates were up around 7%, they closed on a 2.5% loan. And I mean, their payment is in the 2s, right? Where most people's payments in the 4s right now for the same price. And so it's amazing. And they were savers. They had a good down payment that covered the gap between what the property sold for and what was owed on the loan, what was assumed. And so they had saved and done a good job of being prepared for that. And not everybody's there at that same point. So that's just the other thing is having as much cash saved for a down payment as possible gives you that opportunity to take advantage of those assumed loans.
Yep. And I think those who are going to watch this will probably have the question of like, okay, well, what's the catch as far like for the seller? Like, what do I sacrifice here? And honestly, you don't sacrifice anything.
Maybe time. Maybe that's the only thing.
Time, yeah, for sure. Because I knew it
3 months. Usually,
it takes
2 to 3 months.
A little bit longer.
Yep.
I know it can take anywhere from 45 to 90 days.
Yep.
So the time aspect is there, but as far as the financial aspect, it's kind of a win-win for both.
Yeah.
I mean, sellers get a good chunk of cash that they've built up in their equity, and the buyers get an awesome rate.
Yeah.
And there's no reason people should leave there unhappy.
Totally. And if the sellers advertise it right as an assumed loan, then they should get a buyer quicker and for more money.
Yes.
Because
you should get inquiries on that house pretty immediately.
Yeah. Think about it. Would you pay an extra $20,000 on a house that has an assumed loan so that you can save $1,500 a month on your payment?
Yep.
Like that's a no-brainer.
But that is the big caveat is the time.
Yeah.
So if you got the time to do it, you both have the time to do it.
Yep.
Do it.
Yeah. And I think some lenders, some processors could possibly do it faster. But in my experience, it took 2.5 to 3 months to get it done.
One of my lenders, he said it took them about 60 days to get through things as long as everything was like on board.
Yep.
And that's not always the case. A lot of the times, like underwriters need to do things and, there's snags here and there. Nothing you can't work through, but sometimes it just takes a little bit more time. So
totally. Yeah. So there you have it. As far as the ins and outs go of assumed loans and being hyper focused on that. If you're a buyer that's like, hey, I'm not going to pay 7% for a house. There is an option. It's a slim option, but they are out there. If you're patient enough and you're aggressive enough when they come up, and you have a down payment saved up, then you could actually do this and get an interest rate. Even in the 3s. And there's a lot of them out there that were from, let's say, 3-4 years ago, that are in the 3% range. Yeah. So that's killer. That's a great rate, compared to where things are at today. So definitely a good thing to pursue. And
for all the sellers and agents out there, anytime you hear FHA or VA, your bells of Assumable should be ringing right off the bat.
What's the balance?
Yep.
What's the balance?
Give me all the information on that because we've got a good tool here to use if it's available. So don't forget it.
Yeah.
Do not forget it.
Absolutely.
Ingrain that in your memory.
I mean, this is calling anyone who has a sizable down payment saved up, or someone who's sold a house or could sell a house and have a sizable down payment to make up the difference between the purchase price and the assumed balance.
Yep.
And there are some credit unions that I've heard of that will go in as a second, basically, to make up that gap to a certain extent. Like Belco and Super Credit Union are a couple that I know of that said that they don't have any problem with that. And so you can get some financing to fill that gap if you need to as well. So it's just a matter of finding those FHA loans, and making it happen. But if you work with a realtor, like you said, make sure that they're doing those keyword searches for you so that you can make sure to know of all opportunities that are assumable. Because it just makes so much sense to at least know about them.
Oh yeah. Yep.
So.
Good information.
Yep. Awesome. Well, thanks for joining us today. As far as assumable loans go, let us know if you have any other questions. Feel free to comment below, and we're happy to answer those questions for you, or refer you to a great agent in your market. If you're listening from outside of Colorado, we're happy to connect you with someone who would do a great job and could find one of these assumed loans for you as well in your neck of the woods. So thanks for listening. We'll catch you next time. So if you have enjoyed what you're listening to and you'd like to hear more, make sure to press that subscribe button so that you can not miss out on any more episodes that are coming up. And also check out all of our contact information is below. You can see us at the dreamsmithteam.com to look up more information about our team and our history and all of the members of our team, and see contact information that you can reach us if you have any real estate needs.
See you next time.